Everyone, welcome back to the Cash Flow Debates. My name is Eddie Hood, and I'm so excited today because we are going to be talking about how you as an entrepreneur can actually dig into your own QuickBooks file to see if things are working or not. And the reason why we're doing this episode today is because we get a lot of feedback from people saying, I feel like things are off in my business. Financially, something's not right. My accountant and bookkeeper say they're doing stuff, but I get the reports and it doesn't make sense. So we wanted to arm you with 5 things you can do. You don't have to have experience in QuickBooks. We'll make it very easy for you today. We wanted you to be able to go in and just poke around without breaking anything and give you the tools you need to know if your QuickBooks file is in good shape or not. And I have a guest with me today. This is Mr. Thomas Twitchell. He is one of the accountants here at Ignite Spot. And Thomas is great because he is a QuickBooks Pro Advisor, has an immense amount of experience in the platform, coaching clients, helping them with their systems. But also, if you're ever interested in having Ignite Spot do the accounting for your business, he's probably one of the first people you'll speak with. He does he heads up all of our sales initiatives. And so this is the man you'll talk to. And Thomas, tell everybody hi and tell us a little bit about your background.
Well, hi, Eddie. Thanks for having me. Yeah, so I've been with the Ignite Spot as an accountant for about a year now. Really enjoying my time with them. Before this, I came from an accounting background. I went to school for business administration with a focus in accounting. So really focused on how I can help make finances tangible and meaningful for small businesses.
Yeah, that's a good word. I like how you used tangible because I think when people look at accounting, it's an intangible mostly, right? It's something that you can't see or it's not a physical product. But the entrepreneur knows when the numbers are working well and when they're not. And so I like how you're trying to make it something that makes physical sense to people. So that's good. Let's get past all the fluff, Thomas. Let's talk about how we're going to do this. So Thomas is going to share his screen. Now, for everybody that is listening to the audio podcast, I'm going to be sort of narrating this and talking about what's happening here. But you'll be able to watch this episode on YouTube as well. So you can click along in your QuickBooks file and do this. Okay, so go ahead and share your screen, Thomas, and tell us what we're looking at.
All right, so we are going to be looking at the QuickBooks test file. So this way we can get in here and not break anything on anybody's file. So when you first load in to your QuickBooks file.
Let me actually pause here for a second. You said that QuickBooks has a test file, right?
Yeah.
This is nice for people who are even considering using QuickBooks but aren't in it yet. You can Google QuickBooks test file. It will give you a fake login, and you're actually brought into this very same display with all of these same numbers, and you can play around and you won't break anything. So that's what we're doing today instead of using a real client's data.
Yeah, correct. And so when you log in to any QuickBooks file, either the sample file or your own, you should end up on a screen that's like this. It's your dashboard. It'll have a bunch of stuff like tasks, bank accounts all set up. But really what we're going to do today is go through and show you 5 ways that you can check up on where your bookkeeping, your accounting is at, if it's up to date, if you're doing it yourself, maybe things that you can keep yourself accountable for, or questions to ask your outsourced bookkeeping and accounting professional.
Okay, the first thing we're going to do then, Thomas, is we're going to look at whether the bank accounts have been reconciled or not. And this is a big deal because when we ask people, are your books current? They'll say, well, of course they're current. We've been putting data into the system. We pay our bills. We invoice our customers. But then when you and I get into the system, we're going to do what you're about to do, and we'll see that the bank accounts have not been reconciled for 60, 90, 120 days, sometimes multiple years. I've actually been in files where they've never been reconciled. And the entrepreneur thought the books were current, but they haven't gone through this process. So before we look at this, what's the basic summary of what it means to reconcile a bank account in QuickBooks, and why do we got to do it?
Yeah, so the basic idea of a reconciliation is taking the statement from your bank and comparing it to the data that's in QuickBooks to make sure that those two things match up. Because just because you have a check or a bill that went out doesn't mean that it necessarily cleared your bank in the same period. So you want to make sure that you have all of your money out and money in accounted for, and that everything that cleared the bank in that month is in QuickBooks, and that you don't have anything missing or additionally added, like double entries or something of that nature.
Okay, good. So this is important because a lot of entrepreneurs don't trust their QuickBooks cash balance. they go to their bank balance instead and make decisions that way, right? They'll log into the bank, they'll see they have X dollars in there, and they'll make some gut-based decisions on what they think that they have. But if you go through this process we're about to show you, the QuickBooks balance will be far more accurate than the bank balance, which sounds a little weird. But by doing what we're about to do, you're accounting for all of the checks you've written that haven't cleared your bank yet. You're accounting for all the payments you've received from customers that you haven't deposited yet. So it's an actual, it's more of a real world, real-time view of your cash if you do this, right?
Absolutely.
Okay, so what do we do? How do we do this?
So from the dashboard, the first place you're going to go is underneath transactions on the left-hand side here, and you're going to go to the reconcile tab underneath there. And that will bring up your reconciliation hub, and it'll maybe have a couple of windows to click through here to get to where you need. But we have the checking account is selected for this test file, and we can see that the last date ending, the last statement ending date, so the last date it was reconciled on was 2/29/24.
Okay, so that's an important date.
Yes.
And that date essentially means that that's the last time it was reconciled.
Correct. And you should be seeing these reconciled on a monthly basis. That's the best practice, especially for any business account that's getting frequent transactions in and out of it. You want to make sure you're keeping on top of this on a monthly basis. And it might not always be at the end of the month. Lots of credit cards have mid-month statements depending on when you opened your account with them. So that could also be a potential. You could see something mid-month, which is just the same process, just not lined up to the end of a period.
Okay, so if you're an entrepreneur and you have no idea how to do any of the accounting and QuickBooks scares you, you can at least come here, go to the dashboard, transactions, and then reconcile, and then just look at that date and see if that was the last month's ending date, right?
Yeah.
So if it's March 15th, for example, you should be looking at a date of February 28th there. They closed last month's books.
Correct. And then if we look at the checking or the saving account here, we can see there's $600 beginning balance, but there's no last reconciled date on here. So this savings account hasn't ever been reconciled.
Okay, so that should throw up a flag for you, a red flag if you're the business owner. You don't see a date. That means your bookkeeper has never done this, which means your QuickBooks cash balance is probably quite inaccurate compared to what it really is. And if you do see a date and it's several months old, that should also throw up a red flag.
Yeah, it at least gives you the opportunity to ask, do you have access to what you need to reconcile this account, which would be like read-only access to the bank to make sure they can pull those statements, or if you're sending those statements manually to them monthly.
Okay. All right, so that's the first step, the first thing you can do as an entrepreneur to actually decide on whether your books are healthy or not. If things are feeling off in your gut, just go and see the last date that these were reconciled. And also, it should be said, this process, and we can go through a basic reconciliation window here just to show you visually so you can see what it looks like. But it should also be said that in this drop down, you're able to pick your bank accounts, but you can also pick your credit cards. And so this process needs to happen with your credit cards and other transactional accounts that should be reconciled every month. So right there is your MasterCard and your Visa. Neither of those show a reconciliation date either. So they probably haven't been touched or something's amiss here. So look at those as well. See what's going on.
Absolutely. You can use these for this reconciliation screen for loans as well to make sure that the interest is being broken away from your principal balance and that you have an accurate view of how much you really owe on this loan. You can use this for all sorts of different accounts on the balance sheet. Once again, we encourage you, if you're not familiar with reconciling, to maybe not mess with it, but it's somewhere you can get to verify that the work is being done.
Yeah, that's it. We don't want you as an entrepreneur going in and doing the reconciliations because you'll probably break QuickBooks. But we do want you to go to this screen and see if there's a date. Like pick your accounts, pick your checking account, your savings account, your credit cards, and just look at the date it was last reconciled. And if it's not there or it's really old, have a conversation with your bookkeeper and say what's going on.
Absolutely.
Okay, so what's the second thing we should be looking for as an entrepreneur?
Yeah, the second thing is what every entrepreneur loves to look at, which is their profit and loss statement. So if we go to the left side here, we're going to go down to reports, and we're going to pull up it should load up as one of the preferred reports right here, your profit and loss. So we'll pull that up. And the first thing we're going to look for here is any uncategorized income or uncategorized expenses. So anything that says miscellaneous or uncategorized will be a red flag, because that means your bookkeeper or accountant might not have enough information about the transactions. They need some more flavor to figure out where to put each one of these transactions that could be in there. The other thing to look for in here would be negative expense accounts. Those could be from a refund, but those also could be an indication that something is booked incorrectly.
Okay. All right. So you've taken me to a profit and loss. This is just a report in QuickBooks. And all a profit and loss is, it shows all of the revenue in for a certain period and all of the costs going out, and shows me if we made money or not, right? So can you scroll up to the top of this report here, Thomas? You'll notice that right below the words profit and loss, it says January 1st to March 15th. So the first problem I see most business owners making is they don't consider the date of the report. And that's important, because you might be looking at data that's not been scrubbed or cleaned or reconciled by your accountant yet. And then you get angry and say, my books are a mess. And you're looking at unprepared data. So you want to start by saying, what period am I going to check on? And right now it's March 15th. So March's books won't be closed because March is not over. But by this point in time, I would argue February should be closed, right? So I think step number one would be to change the date of this report to show February's performance. So you'll go up to the top here and you'll put in the beginning and the ending date. So February 1 to February 29, because we had a leap year this year, right?
Extra day.
Extra day. You'll click run report. And now you'll see under the profit and loss there, it says February 2024. That's the most important thing you can do when looking at this report. And this is where everybody gets it wrong. So now I'm looking at just the revenue in for February and just the cost out for February. And I can begin to do what Thomas is saying. So you mentioned looking at uncategorized things first. Well, what does uncategorized mean? If I'm an entrepreneur, what does that word mean?
Yeah, so if you're an entrepreneur and you're doing your own bookkeeping, you might put something into uncategorized if you don't know where to put it. If you don't know exactly where it should it be on the profit and loss statement? And if so, where would it go? They could go into an ask my accountant or a miscellaneous one. If your bookkeeper is putting items there, it's because they might have a transaction from, say, PayPal or Zelle, something that doesn't give them a lot of information in the bank feed text line to tell them what that charge was for. And they need some more clarity on it.
Okay, so essentially what you're saying is when a transaction comes into QuickBooks, the accountant or the person doing the work has to make a decision on how to code that transaction. So they're going to look at this $50 expense and say, did we go out and is this meals and entertainment? Or is this office supplies? Is this insurance premium? What is this? And you have to decide what that is, and then you code it to the right account, right? But many transactions don't come with the information we need, so they get put in this holding bucket called Ask My Accountant or uncategorized. So where's that at on the P&L? You go all the way to the bottom.
Yep. So generally, it will be on the bottom of the P&L under miscellaneous, other expenses, or other income. And so we can see right here, we do have $2,600 sitting here in miscellaneous. And if we click on that $2,666 line, it'll drill down into this transaction report. So we're going to be able to see what items are in here. This is also a port you can export as an accountant or as a entrepreneur. You can export this so that you can give notes in Excel to your accountant on this. They can export it and send it to you so that you can give them those notes as well. So this is something that we like to utilize at Ignite Spot to get a lot of data on using Google Sheets. Since it's a live feed to the client, we're able to get that information really quick.
Okay. So this miscellaneous thing is bad, right? We don't want stuff in miscellaneous. Or again, your bookkeeper might have changed the name of the account from miscellaneous to Ask My Accountant or something, right? Uncategorized, I've seen that before. But you don't want stuff here. And we don't want transactions here because that means that that all of the rest of the numbers are incorrect, right? Because I saw, for example, in that miscellaneous thing there, when you drilled down, you had an insurance payment.
Mm-hmm.
Well, that should probably be moved up into insurance payments so that part of my report is accurate. And this is why, as a business owner, you're looking at your reports and you're like, these numbers don't feel right. And it's probably because you've got a big chunk of stuff that hasn't been categorized. So all we're asking you to do as a business owner, not change anything, not do any accounting, but go to your P&L, look at last month's report, and then go to the bottom and see if you have a miscellaneous account. If you do, you need to have a conversation with your accountant or your bookkeeper and say, come on, guys, what's going on? Why do we have a bunch of untagged things here? This is not acceptable.
Yep, absolutely.
You also made a really great point about negatives, right? A negative number usually is a bad thing in accounting. We don't like negative numbers. There are times when it's okay, which we'll get to, but more often than not, if you see a negative number on a report, it usually means there's an error somewhere, right?
Mm-hmm.
So you're pointing at one. What are you looking at there?
Yeah, so I was working on this file a little bit earlier, and we have commissions and fees here, and I have a negative $500 in here. So let's just click into that and see if we can see why it's showing a negative number. Is it a refund? What is it?
So real quick, the commissions and fees, we're looking at the profit and loss statement. I'm trying to narrate this for people on the audio podcast. But commissions and fees is an expense account, everybody. So this is a cost to your business. And so that shouldn't be negative on the report. How can you have a negative expense usually, right? So more often than not, again, somebody has done something incorrectly here. So what are we looking at?
So what we see as we drill down into that is we have a journal entry that's dated on 2/29 for this commissions and fees for the negative 500 amount onto the profit and loss statement. So at this point, from an accounting standpoint, this looks like a journal entry made to clean something up at the end of the period. But this would be a great time for you to ask your accountant or bookkeeper, hey, what was this for? Why did we write this back onto the profit and loss? Why is it here? It just is it's a good narrative to start to show that you're paying attention to your books.
Well, that's a good tip, Thomas, because if you can show you're paying attention to your books, I guarantee that will change the behavior and the tenacity of your accounting team because they know you're watching, right? And that's a good thing. But that negative $500 expense, if we were to translate that into English, what that means is that your salesperson owes you $500 if that's accurate, right?
Mm-hmm.
You didn't pay them $500, they paid you. Now, there are times when you might have a negative. As you mentioned, sometimes we do receive refunds.
Mm-hmm.
Sometimes people overpay for things and what have you. And so in those instances, we might have negatives. But if on any report you see a negative, that's a good time for you to question it and drill in and say, should that be there? Because most of the time it shouldn't be. Something's off.
Right. The other time that you'll see negatives on the profit and loss is under income, under discounts or refunds. So this is what we call a contra revenue account. So it's a backwards revenue account, and it's there above in the income line so that you can keep it together with your income because it's a direct part of your sales process. So that would be the only other reason that you would want to see a negative on here is if you were giving out discounts or refunds.
Yeah, so that line, it makes sense that those would be negative because they are discounts. We're reducing the revenue, right? That makes sense. Okay. So while we're here, one of the things that I love to do, if you feel like your books are off and it's a mess and you don't know why, one of my favorite things to do is to look at this same report, but not just a single month. I like to look at 3 months stacked up and just look at trends. So Thomas is going to change the date here now. He's going to go to the beginning date, and let's start with December 1st, 2023 to February. So now I'm going to get December, January, and February. And then he's going to change the display column. There's a little drop-down box. It's titled Display Columns By. And instead of totals, we're going to display it by months. Then we'll run that report. And now it's going to change this report to show me 3 months stacked up against each other with the total. And this is really great because now, as a business owner, I can look at trends and see if what I think is wrong actually is wrong. And so I've got this set up so that I can go through each line now and just look across. And businesses, honestly, most of them don't change in spiked fashion, right? They're usually pretty consistent with revenue and costs and payroll. Your business might not be in certain areas, but most of your business is going to be consistent. So if I look at this, for example, rent or lease, we've got a line for rent payments and lease payments, right? It's up a little bit more there, Tom. Yep. We have no entries in December, no entries in January, but now we have a $9 entry or $900 entry in February, right? That's a little weird to me. Either we just started our office payment in February, then that would make sense, or somebody has not been booking rent payments for the past couple months, and that's why my books feel off, right? This is an expense, and if you go up to the top and we look at a revenue line item, revenue is the same. Cash coming in. If you're seasonal, you can expect to see some seasonal movement. But if you're pretty consistent, like at IgniteSpot, for example, we provide accounting services to businesses. Our revenue is pretty much the same every month. It goes up or down a little bit, but it's not a big swing. So I would go, so in this business, which is a fake landscaping business, we've got fountains and garden lighting, right? So they've got $300 in December, almost 700 in January, and then 1,200 in February. That product line is growing. And as a business owner, I can now question that and say, does that feel like what I'm seeing on the floor? If I do see that service line growing, okay, that makes sense. But the one below that, plants and soils, no revenue in December, $100 in January, $2,000 in February. That's a big change for this small business. So you would want to ask yourself, is that the story I'm seeing? Or are we not booking our plant and soil revenue somewhere? I don't know. What do you think, Thomas?
Yeah, I think that, and especially with seasonal businesses, these numbers can swing a lot, and that's where you can get into some other comparisons as far as same time last year comparisons. That would be probably for a different day for a like deeper trend analysis that we can look into. So it's really just knowing more, is you knowing your business. I know that in February we're buying plants and that's starting to increase. We're getting jobs in. If that feels right, great. And you didn't do any in December, perfect. This looks great. If you're like, no, I definitely sold plants in December, like you should probably look into it.
Yeah. So one of my favorite things I hear at Ignite Spot all the time is the head of our CFO coaching department, Ryan Steck, always says the same thing. He says that your financials should tell a story. There should be a story behind these numbers. This shouldn't just be a report of numbers. There is a story being told here. And you as the entrepreneur are the one who's most familiar with that story. So like Thomas just coached us on, you should be asking yourself, is what I'm seeing here actually what's happening in real life? Is this how I'm selling plants and soil? Does this story make sense? If it doesn't, you should trust your gut. You know your business better than anybody. And this is another moment where you need to sit down with your bookkeeper, your accountant, and say, hey guys, what's going on? Because I know we sell plants and soil every month. This report looks off to me. Okay, so what's the next thing an entrepreneur can do who's not experienced in QuickBooks but can get in and see how if the file's healthy or not?
Yeah. So the next one is a really scary report that most entrepreneurs try to not look at, and it's called the balance sheet. And I promise it's not as scary as a lot of people think it is. It actually is crucial in establishing and really understanding the cash flow of your business and the overall health. So back on the reports tab, it'll be one of your favorited reports. And one of the biggest things, the differences with this one as opposed to the profit and loss is going to be for a set period of time. So you can set it for a month or 3 months like we just saw. The balance sheet is going to be from the beginning of time of your business to the end date on the report. So it's a cumulative report that brings everything forward. So once again, we're not going to want to have this on 315 because we're not done with the March financials. So we'll change this back to 229 and run our report, and we'll start from there.
Okay. So the way I like to describe this, if you're listening on audio, a balance sheet is pretend like you're a photographer and you walk into a business and you've got a really special camera that can take a picture of the value of things, right? So you're walking into your business on February 29th because that's when the accountants closed the books last. And you're going to take a financial snapshot of the business as it sits on that day for everything it's ever done. So this is the value of the cash in the bank accounts, how much you owe on all your credit cards, how much your assets are worth, how much debt you've incurred, all of that stuff. This is like all of your assets, all of your liabilities, and all of your owner equity in one report. It's my favorite report, easily.
Yes, it's definitely a lot of accountants' favorite report, and it's the one that the entrepreneurs. It's not as shiny as the profit and loss because the profit and loss is how much money went in and how much money came out. But there's ways that money can kind of get moved onto the balance sheet, and you don't see it on the profit and loss through loans and other receivables and stuff. So we want to make sure that we're taking this money into account because I know, Eddie, you've told me lots of times where you have business owners come to you and say, I know I made $10,000 last month, but I have no money in my bank account. I only spent $8,000. Where's my other $2,000? And it's probably somewhere on the balance sheet.
Yeah, the balance sheet is where money goes to like hide in a business. And so you really need to understand this report. And maybe we can do a deep dive on a balance sheet in a different episode. I like that idea. For today, I think, what are we looking at here that an entrepreneur can do a quick glimpse to see if this report is healthy or not?
Yeah, this one's really easy. All you're looking for is negative numbers on the balance sheet. with QuickBooks Online and Xero, any of your modern accounting softwares, they've automated the double entry bookkeeping. So we don't have to worry about seeing liabilities and assets as negative or positive and how that looks. They've made it very simple so that it all should look in a positive nature, with a couple exceptions. But if I'm going through this, I'm going to be looking for anything that is throwing a negative number. And so we can see right here, we got a board of equalization payable. So if a payable is negative, that means you overpaid it. And you are currently $129 overpaid on this. So this would be something that I would go to my bookkeeper or accountant and ask them right away, hey, am I really overpaid on this board of equalization payable? Or is something not booked correctly?
Or it could be, like you said, something might not be booked correctly. Somebody in the accounting team might have made an error or a mistake, which is definitely happens a lot, and that's what causes a lot of these negatives. There is a section on the balance sheet that can have negatives to it, though, and that there is one place where that makes sense, which is down below in the equity section.
Yeah.
The balance sheet comes with this sort of basic idea that if we take all of your assets, the value of them, and we subtract how much you owe in debts, in other words, your liabilities, the balance, what's left, is your equity, right? That's the main idea. Equity being on paper, not in the market, but on paper, what's your business worth? That's a very different thing. Don't look at this as like how much you can sell your business for. It's just simply an accounting function to see dollar-wise what's positive or negative. And you want these numbers to be positive. So on this business, for example, we see equity. We've got a couple lines here that are negative. That likely will be okay because equity, you have money coming out and you have owners putting money in all the time. So we have distributions, we have contributions. So don't freak out as much if you see negative numbers here. What I want you to look at is the total equity number at the bottom. And if that's negative, then that's not great. That means that you've got more debt in your business than assets. It means you're upside down, right? And we really don't want that. So as your accounting team or your existing accounting team should be working with you to figure out how to write that number, get it positive. So you're looking for negatives. If you have a negative on the balance sheet, go ahead and ask your bookkeeper, your accountant, hey, what's the story here? Why is this negative? There probably shouldn't be negatives here.
Right. Absolutely. I think the other thing that you can kind of quickly check on a balance sheet as well is what your ending balances are as of February 29th compared to your reconciliation. We already kind of touched on this, but you can see, is this number accurate or at least close to what my bank is telling me I have in my account at the end of February? And if not, that might be a reason to look for some stale or outdated checks, maybe things that got double entered that are reducing this balance, or invoices that had a payment that wasn't received correctly and it's double booked in income. So you can kind of take a minute to look at this, and if they're really off, that can be a question for your accounting team as well. Hey, I noticed that this is $5,000 different than what's actually at the bank at the end of the month. Can you tell me about this?
Yeah, and your accountant should be able to tell you, oh yeah, we have a check that's outstanding for XYZ. And that you'll go, well, yep, that story, there's that word again, that story makes sense. But if your bookkeeper goes, oh, and they hem and haw, that's a moment where you need to go, why don't you know what's happening here, right? You're the master of these numbers. You should really know why this cash position is way off. Now, okay, so we've covered three main things. We've talked about looking at the last date your bank was reconciled, very important, credit cards as well. We've talked about looking at the P&L for negatives and uncategorized things, right? Transactions.
Mm-hmm.
We've talked about looking at the balance sheet for negative numbers that could throw things off. But I think the next one we're going to, if I'm correct, is there are two very important accounts on the balance sheet that most people care about, which is cash in or accounts receivable, and cash out or bills, which is accounts payable. Is that where we're headed next?
Yeah, that is where we're heading next. And not every business will use accounts payable and accounts receivable. But if you are, this will be an important step for you, especially if you're outsourcing your payments of accounts payable or you're invoicing with accounts receivable. This is a good place to come in and make sure you're current if you're not actually processing those payments yourself. And so the easiest place to get to this one is honestly to go up to the little search icon, the little magnifying glass at the top right corner, and type A/P or AR. And you're going to see under reports, you'll see accounts payable aging summary.
Okay. So real quick, when he looked that up, everybody, QuickBooks presented him with a couple different versions of this report. There was an accounts payable aging summary, and there was an accounts payable aging detail. It's the same report, but the detail is ridiculously hard to read sometimes. It's just too much data. We start with the summary, and if I need to dig in, I can go to the detailed report later on. But so we're starting with the AP, which stands for accounts payable. And this is what is this report telling us, Thomas?
So this shows us our bills that are entered in QuickBooks that have yet to be paid. So this is all the money we owe people.
Okay. All right. And it's got columns in it, right? So what do all of these columns mean?
Yeah, so we have our current, so 0 to 30 days, or like however that is identified within the bill, if it's current, 1 to 30 days outstanding, 31 to 60, 61 to 90, and 91 and over. So as you get further to the right here, you're going to see the more outstanding bills. So potentially the ones that have additional fees added to them, or the ones that you need to prioritize paying first.
Okay. So this is a really great report for you as an entrepreneur because this makes sense to you in your brain. These are people you owe money to and how long you've owed them that money. And whenever I pull this report up, because we do a free QuickBooks file review for everybody that knocks on our door, right? We do this whole process for them. We show them this report, and every time inevitably they go, most of these bills have been paid. Why are they still on here, right? And so it's a really great exercise because as you go down, it's almost frustrating because you'll see all of these bills QuickBooks thinks you owe, but you've paid them. That's the next clue that your books aren't as healthy as maybe your bookkeeper or accountant is saying that they are. And it's another justification for you as to why you're feeling like things are off, right? So start here, look at these bills and ask if you've paid them or not. Now, I've also noticed we've got a negative on here.
Right. Yeah. So if you're using accounts payable and you book a bill or an expense comes through in the bank feeds and it doesn't get matched to the bill that it's supposed to accordingly, you can get a negative number on here. So this is money that you paid to Robertson and Associates for accounting services that you have the negative, you have the payment here, but your bill still looks like it's outstanding in QuickBooks. So overall, you have a $0 balance with them. But this is really messy. You would rather just not see this at all. So this is just a good indicator that there is a system breakdown somewhere where we're not getting the payments applied to the bill as they're being paid.
Yeah, this is lazy accounting 101, I think. And a lot of people will tell me why does it matter? It ends up netting out to zero, right? And the reason why it matters is because you're going to have over time all of these bills build up in your system that show as unpaid. And although the accountant was able to fudge it in the back end and force it to a zero, now you've got a payment that's not tied to a bill, and you've got a bill that's not tied to a payment. So you've got these two floating things in your file. And just one is not really a big deal, but this sort of ideology leads to hundreds of these things over time. And then it's just impossible to manage the AP. So come here and look for this report, look for negatives, and you'll notice in the total column, they net out to zero. That's not good. We need to match these up. Now, sometimes I see in the total column a negative number. We don't see that here, Thomas, but what causes that?
Right. So that would be where you have an expense that was put to accounts payable to this account without having a corresponding bill to it. That is one way that could happen. So you're having somebody that is trying to use accounts payable, but they're not using it correctly.
Okay, so that's interesting. So you're saying there's a way to put information into QuickBooks. You can do this in QuickBooks. You can pay a bill without a bill being in there.
Right.
Yeah, and that's now we have all sorts of new problems because we don't have an audit trail. We've got negatives everywhere, and we don't have any reason for paying it, right? Mm-hmm. So this happens in businesses where we don't have a strong procurement process in place. We don't have a purchaser in place. We don't have anybody approving AP. We've just got some random person paying bills that come in, and that leads to this dysfunction.
Yeah, accounts payable can be very, very helpful because you do realize your expenses in the time that they are incurred, not necessarily when they are paid. And that can be very helpful in seeing where your money is going and how it's all being distributed across the different months. But it can be hard to keep it all in line if you don't have the right systems in place.
Yeah. And I also want to point out, too, as an entrepreneur, this is a report that is really valuable to you because it allows you to manage and maintain relationships. So your vendors are important to you. They are what keep your business up and running. And when you come here and you look at this, it's really nice to visually see how many months behind you are in paying people, because you can say, oh my gosh, that's an important relationship and we are 90 days on them. You can work that out, right? There are also times where you have to manage cash flow just to survive. And this is a good tool to do that. It's like, hey, I've got 90-day terms with them. I'm going to let this sit for a month or two because I can. We need to make payroll. So this is a good decision tool and no accounting background required. It just makes sense.
Absolutely.
The list of people you owe and how much you owe them. So I love this report. Yeah.
Yeah.
Good.
So the next one is super similar to this, and we'll get it the same way. We go up to the magnifying glass icon and we type A/R for accounts receivable. And we're going to once again pull up that accounts receivable aging summary. And what this one,
Yeah. So this looks just like the last report.
it looks just like it. The biggest difference here is that this is money that's owed to you.
Yeah. We like money owed to us, right?
We like money owed to us. We like to make sure it's probably not in that 91 days and over category. That just means that you have somebody that you provided services for that hasn't paid you yet. And so this is a great way to make sure that you're following up with them and keeping them supplying your business with the money you need to make payroll.
Yeah. Again, another great relationship tool, everybody. So when you come in, this is a list of all of the customers who owe you money. And you might have a lot of customers that just immediately pay. They'll never show up on this report because they're just your top customers. Anybody on your AR report might be what you would consider on an ABCD version of client. They might be your C's and your D's because they're not paying on time. And that's really good to know because you can decide, hey, look, in this case, we've got Red Rock Diner. It's only $156 bill, but they've owed it for almost 3 months now.
And they have another bill that's outstanding at 70. So
should we continue? Yeah, great point. Should we continue to service them because they're not paying their bills? Is something going on there? Maybe their accounting function's broken. Maybe they don't know. Maybe we did a poor job sending them the bill. Maybe our invoicing system is failing, but something's wrong and we need to get after that. So
this is also a good place for you to come in if you know that Red Rock Diner has paid this $156. This, once again, leads to that question to your bookkeeper. Hey, I see this is outstanding. I know this was paid. Why isn't it closed out? If you are very in touch with your accounts receivable, this will make sure that you're touching base with the right people or that your outsourced bookkeeper is touching base with the right people.
Yeah. This is, again, another report we pull up for people when we do the free QuickBooks file review. And we just ask them, does this look accurate to you? Do these people owe you money? And it's very revealing. Few entrepreneurs spend time with this report, but once they do, they're like, oh my gosh, this is a mess, right? Like, or you might say, we did a giant project last month for $180,000 we haven't been paid for yet. It's not even on here. Where's it at? Right?
Right.
You eat and breathe this business. You live it. You think about it. You can't sleep at night because it's all you're thinking about, trying to keep cash flow going. And this report is your sort of secret tool to working with your accountant to make sure this stuff is right. I think it's so good because there are a lot of other reports in QuickBooks that are specifically designed for the accounting brain that just entrepreneurs don't like. If we get into like statements of cash flow and if we get into trial balances and if we get into all sorts of debits and credits, those are things you don't need to make better decisions with. But this tool is a daily weapon to help you be better.
Mm-hmm.
So, and note everybody that for the AR and the AP report, they also have dates. So right under them, this says as of March 15th. So you do have to be careful that you are thinking about your dates appropriately because, again, you have to give your bookkeepers and your accountants some grace. There are time lags in the world of business. It takes a while for bills to get into the system and reviewed and reconciled and approved and all that stuff. So what has happened in your brain might not have gone through the accounting platform yet. So it's usually best to set the date for this as of when the books were closed last. And that will give you the strongest indication of how AR or AP was. If you look at it as of today, well, today's in flux. We've got documents moving on people's desks and bills are being paid, and right? You can definitely look at it as of today, but just be aware that it's going to be a little more squishy.
Yes.
That's a real accounting term, by the way, squishy.
Yes, absolutely.
Yeah.
But that was it. Those are
Okay,
the
good.
steps I have to
Yeah.
look through your books real quick to see how what your accounting looks like and what your business health looks like. And kind of the start of our review process. We obviously go a little bit further in depth with this at Ignite Spot when you do our free review, but this is the starting point, and this is something that anybody can do to get an idea about where they're at.
Yeah, very, very good. So again, if you are a business owner and you are lying awake at night, just feeling like something's off, the money's not working, my accountant says we got cash, I know we don't have cash, things are always stressful. I would love for you to have the confidence to be able to get into your QuickBooks file and know you're not going to break it, but do these 5 steps just to do a little bit of detective work, some research, because you need to be armed with what to say to your bookkeeper or your accounting team. If that seems completely overwhelming to you, or you want somebody to give you a more professional look, as I mentioned, Thomas does these reviews for free. We do a 30-minute review. Any business within the United States, you have to be based in the United States, you have to be in QuickBooks, and we typically service businesses that are annual revenue size $750,000 a year, more in sales and up is typically what we support as businesses. But if you fit those criteria and you want Thomas to get in and poke around, then the best way to do that is to go to ignitespot.com. And up in the top banner, there is a button that says get a free QuickBooks review. If you click that, it'll take you to Thomas's smiling face and his calendar, and you can just put in a time that works for you, and he'll get started for you free of charge. Anything you want to say on that? How have those reviews gone for you, Thomas?
Those reviews, they've been great. I've felt even with leads that have come in that haven't turned into clients of ours, I've given them tangible things to walk away with, to ask their accountants about, to ask if they're going to keep their current solution, or if they're doing it themselves, arming them with a little bit of knowledge about different things that they can look at to continue to keep up if they're not ready to start services with us yet, but to get it into a better place before coming in with us. So I think they've been great. I love giving back to the entrepreneurs in the country and being able to be an asset to them. So doing those reviews is just another additional perk of working at Ignite Spot.
Yeah, it is fun. And sort of our philosophy has always been just to help you get better accounting, whether it's with us or whether your existing accounting team just needs some direction or whatever. That's the goal. We're absolutely not salesy at all. We're just here to help and make sure that you feel comfortable with your book. So if that's of interest to you, go ahead and click that button and set up a meeting with Thomas. And until next week, as always, make sure to stay profitable in your business. Feel confident getting in your QuickBooks files, and we'll see you all next week.